Morning, boys and girls, ladies and gentlemen. This is Manny Magoo, Manny the Magoo, they call me. I was asked to do a video on a stock analysis on Draftkings. The symbol is DKNG, and I promised some of my colleagues, friends around the U.S. and world that I would put a little video together and give them my take on Draftkings. Again, this is not a video where I'm going to tell you to buy. I am not telling you to sell Draftkings. I am not telling you to hold Draftkings. Okay? This is for entertainment purposes only. If you like what I have to say, great. If you do not like it, that's fine too. I'm just here to give you my take on it. I've been trading for over 20 years. I have a lot of knowledge when it comes to technical analysis. I usually my style of trading is more price action. I really pay attention to the candles, and I also pay attention to support and resistance. And basically, the only thing I want to do is show you what I do, how I analyze a stock based on the charts, okay? I try to not pay attention to all the news. The chart actually dictates to me where a stock is going to go, and that's just, what I do. But I want to take you now into my analyzation of Draftkings. So this right now, folks, and mind you, you might not know or understand what I'm going to talk about. So if you want to learn about price action trading, okay, you can always email me. I would be more than happy to explain to you my method of trading, okay? My email is hunterchasetrading@gmail.com. Okay, so let's dive into this. Okay, so the first thing I have up, number one, I use the Thinkorswim platform. I like it. I'm used to it. I've been using it for God knows how long. And it's just something I'm comfortable with, and I really like their platform. Okay, it works for me. There are many other platforms out there. I'm not telling you to use Thinkorswim. This is just something that caters to my style. I like it. I use it. And I guess I'm used to it, Anyhow, this is a daily chart on Draftkings. Each candle that you see here represents 1 day of activity, okay? So each candle, as you can see, consists of a 9:30 a.m. open and a 4 p.m. close, okay? And the beautiful part about the platform here on Thinkorswim is that it gives you an indication of what the high is for the day, right up on here. And if you hover over the candle, it gives you the low of the day, it gives you the open, and it gives you the close. Okay? So now, I am not a day trader. I don't really pay attention to the minute charts, the 5-minute charts, the 15-minute charts, the 30-minute charts. I'm more of a swing trader. I'm not saying day trading does not work. There are many people that are successful at it. It's just not my style. I don't want to watch every single tick. I don't want to be out of a position before the end of the day. Sometimes if I think that the stock is not doing what I expect it to do, then yes, I'll close my position. But if it's working, I'm not scared of holding overnight, okay? Or holding for a week, or maybe even holding for a month, okay? So that's just the way I trade. But the first thing I look at is I always look back to the future. I always look back. The past is going to indicate the future of most stocks, okay? But the first thing I look at, so this is what I do when I analyze a company. The first thing I do is I look back at a monthly chart as far as it can go, okay? And obviously on Draftkings, we don't have a tremendous amount of history because Draftkings went public not too long ago, okay? So now what I'm looking at right now is I'm looking at a monthly chart, and each candle here represents 1 month. It represents 1 month of activity, okay? Going back last month, let's look at October. We had Draftkings ran up to $64.19, which was the high, and then it threw up and went all the way down to a low of $34.90, which was unbelievably dramatic fall. Not sure why it fell so much, to be honest with you, but I don't think the company's going to go out of business. And a lot of the people that asked me to do this video are actually holding it up at the $60, $64 range, the $50 range. And they were a little worried, and they asked me to do this video and, kind of my take on it. So anyhow, so the first thing I do is I always look at the previous month's high and low, okay? And what I usually like to do is I go to my drawing tool here, okay? And I'm going to put a line on the high, a horizontal line, 64.19. So let's put a high right there, okay? Let me just make sure it's accurate, 64.19 and 64.19. And Thinkorswim gives you this tool. It's awesome. It's great. It's easy to use. And what I usually like to do is I like to identify my monthly highs and lows with a yellow line. Okay, so I've got my line drawn at the high, 64.19, and then I'm going to draw my low, which was $34.90 for the month of October. Okay, so let's just go here. I'm going to edit it, $34.90. All right, and I'm going to do one more here, $34.90. And I'm going to change the color to yellow, and like that I know my weekly high and the monthly high and monthly low, okay? All right, now, the next thing I do is I go to a weekly candle chart, okay? So each candle here represents a week. Now, obviously, the monthly candle has a lot more weight than a weekly candle. And a weekly candle actually has a lot more weight than a daily candle. Why? Well, a monthly candle has 4 weeks of trading data, okay? A weekly candle has 5 days of trading data. A daily candle only has 1 day of trading data, okay? So the longer the time frame, the more data it has. And I take into consideration that a monthly high and a monthly low has a lot more support and or resistance than a weekly high and a weekly low, and a daily high and a daily low, okay? I hope you understand what I'm saying, but if not, again, you could always email me, and I'll be more than happy to explain it further. Now, when the trading week closes on a Friday, what I usually do is, and I do this every week, okay, before the bell rings on Monday, whether it's Saturday, whether it's Sunday, or whether it's after 4 p.m. on Friday, what I always do is, number one, the first thing I do is I pour me a scotch on the rocks. That's what I usually like to drink during the time when I'm doing these charts. And the next thing I do is I come to the monthly. As you can see, I put in my high and low, and then what I do is I always go to the previous week. So the previous week, the 10/26 week, the high of that week was $42.64. So I'm going to draw me a line at $42.64. Okay? There you go. And what I do is I keep it red, and those are my weekly highs and lows, okay? Then I'm going to draw a line on my weekly low. Now, my weekly low was $34.90, which is actually the previous month's low. So I don't even have to draw a line. I know that $34.90 is the last week's low, and it's also last month's low. Okay, if last week's low was below the 34.90, let's say it's 34.30, or what have you, I would, always draw my line on the low. So usually in a chart, I usually have two yellow lines identifying the high of the month and the low of the month, and that stays on my chart for the whole month, the new month of November. So the lines that I have right now are October highs and lows. Those lines will stay on my chart for the whole month of November, okay? The only thing that really changes in my charting is the weeklies, because the weeklies obviously change every 5 days in a month, okay? So that's basically what it is that I do. Now, if you go to a daily chart, okay, now I can clearly identify the high. Now, by the way, these are all daily candles, okay? So I could identify the high of the month, the low of the month. I could identify the high of the week, previous week's high, and the previous week's low. Now, if the price of the stock is in between the high and the low of this line, well, the high automatically becomes resistance, okay? And that's a weekly resistance line, okay? The low automatically becomes support, okay? And basically what I usually like to do is instead of going in on a shorter time frame, I really like to see a stronger move. And I know that if a stock breaks the previous week's high, it would be a stronger indication of a trend reversal or the trend continuing to the upside, okay? Now, this is a daily chart, and you can actually play this also on a daily chart if you wish to do so. Okay? As a matter of fact, if you take a look at the November 2nd candle, the high was 36.67, okay? And it stopped. The low was $35.02. The Draftkings never broke the previous month's low of 34.90, okay? It did find support in this area. As a matter of fact, if you actually take a look at this chart on a daily time frame, you'll see that there's quite a bit of support in this area here. Okay, I understand that it did break this area here of support. It went down, and it found support. See, the beautiful part about this is that you can always look to the left to dictate the right. If you take a look at just this area here, and I want to show you, okay? Just check this out for a second, okay? Draftkings started its move here, and then it failed. It couldn't go any higher, and it came right back down to here, okay? So it came back down to this candle's low. The low was 27.53. So if you wanted to, you can actually draw a line here at 27.53. That's just an indication of support. Okay? And then all of a sudden it started to march right back up. Okay? Came back down, went up, broke, came back down. But look at this. Look how the past always dictates the future. When Draftkings was throwing up back in June 22nd, and it just came down, 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 look what happened. It found support. Where did it find support? Look to the left. Look at that. The low is 27.56. It got down to 27.54 before it started to run up again. Okay? Now, this is very important to understand. Okay? The most important thing I believe when you're trading is identifying levels of support and identifying levels of resistance. That's extremely important. And until you learn that, you're not going to be a successful trader, okay? Now, I'm not saying that you can't use also other indicators. I'm not saying that. You can use whatever you want. Some people like using moving averages. Some people like using MACD indicators and RSIs and stochastics and Fibonacci and it just goes on and on and on. And I'm not saying that they don't work. I'm just saying that I'm a price action trader. I can identify a move before the moving average does. Okay? I can identify a move before the MACD indicator does. I can identify a move before the stochastic does. Why? Price action trading, when you're playing with price action, you could identify move sooner than a moving average does, because moving averages are lagging indicators. Stochastic is a lagging indicator. The price of the stock has to move first before anything else does, okay? And also, I like having a clean chart. I don't need all the lines and I don't need all the paraphernalia on my chart. This works for me, folks. I've been doing it for a long, long time, and I've done well doing it, and it just works for me. It's just my style of trading. Okay, so going back to DraftKings here. Now, if you wanted to, you could have taken a position, a small position. I look at it as a small position on the daily highs break of 36.67, and that was on 11.3. Now, if you would have taken this long, and to be honest with you, I mean, look at DraftKings. It's just been coming down, down. See, do you see how it's been breaking the previous day's low? Okay, so if you're a short trader and you're going short this stock, you'd make a fortune. I mean, every time, look, this day it broke the previous day's low of this day. This day it broke the previous low of the 10.5. This day it gapped down. It broke the previous day's low. Here's another break of the low, another break of the low. Now over here, it tried to reverse, okay? And if you're a daily high and low trader, let's say you wanted to take this on the high, which was 51.70. So let's say you took this trade soon as DraftKings broke the 51.70 level, thinking that it was going to reverse and go up, okay? Well, you could have made a little bit of money, but at the same time, it wasn't a big move. And again, that's why I emphasize weekly candle breaks, because there's a lot more meat and potatoes in a weekly candle break than there is on a daily, than there is on a minute chart or a 5-minute chart or a 30-minute chart, okay? That's just my opinion. So I always like to look at the weekly breaks. I'm looking for a lot more meat and potatoes in a move, okay? I really need to eat. So I'm not interested in scalping. I'm not interested in making 5 or 10 cents on a trade. I'm not saying that you shouldn't do it, or you shouldn't become a scalper, or you shouldn't become a hyper scalper or a day trader. I'm not saying that. What I'm saying is this is just my style of it. I'm a very defensive trader. I believe in a great offense wins games, but a greater defense wins the championship. So I'm much more of a defensive trader. I'm much more conservative. But again, if you did take this break, let's just say you wanted to play this break. Let's say you wanted to play the daily candle break, and the high was 51.70, and you maybe put an order at 75. Okay? Well, the good thing about this strategy is that you know that once it breaks that 51.70 of resistance, well, 51.70 now becomes support if the price is above 51.70, yes? So 51.70, if the price comes back inside and breaks down 51.70, if you want, you can get out. It's a failed breakout. And guess what? Didn't cost you much money, okay? Because if a stock breaks a previous day's high, or if a stock breaks a previous weekly high or a previous monthly high, what is it supposed to do? It's supposed to run, folks. It's not supposed to pull back, okay? And if the stocks are following the rules, then the move should go. But if it doesn't, you can always get out, okay? You could identify the area of getting out. Now, it's up to you when you want to get out. Some people can stomach 5% down. Some people can stomach a 10% move down. Some people don't want to stomach anything at all. They just want to get out, which is fine. Okay? My style is more, I get out if the move doesn't work, because I only get into a position if the move is working. Okay? And I expected to do what I wanted to do. Okay? But again, DraftKings, if you got in here on the daily high break of 36.67, it'd be a nice little ride, and it's actually moving. We're not sure what it's going to do today, but at the same time, number one, I am not in DraftKings yet. Reason being is because, number one, it still hasn't broken the previous week's high, which is $42.64. If it does break $42.64, I might take a starter position on DraftKings. I'll go in not too heavy. I'll take a starter position because this is the first time it's tried to, in weeks, that it's tried to break above a previous week's high. So it might be a trend change. It might have gotten tired of coming down, and people started buying it again. So I might want to jump on that train and take it for a little bit of a ride to the upside. But again, if I get in DraftKings at 42.64, and let's just say I have an order at 42.65 or 42.70, and it starts to go, great. But if it pulls back and breaks below 42.64, well then, you know what? I'm going to get out. It's a failed breakout, and it's back inside a weekly high now. But that's completely up to you all. I'm not going to tell you when to get out. I'm not going to tell you when to get in. This is just my advice, my thoughts, and my opinions. Okay, but that's basically where we are on DraftKings. Okay, so right now, again, if you are in this trade, 42.64 is going to be your area of resistance, okay? And right now, if you, and the support is at 34.90, okay? So that's where I see the support. That's where I see the resistance. Again, we don't know who the president's going to be. There's a lot of ifs, ands, or buts. We don't know what's going to go on. We don't know if Biden's going to win yet. We don't know if Trump is going to win yet. So there's a lot of indecision in the market these days. So you have to be a little bit careful, okay? Again, being defensive in trading is ultimately a wise decision that I recommend for everyone. So anyway, I have to get going here. But anyhow, I just wanted to give you my take on it. If you have any questions, if you like this video, I don't usually do many of these. I usually do a lot of personal and private sessions with individuals and investors and people who run hedge funds on my technical analysis of their stocks and their holdings. I don't usually do these videos, but I promised a couple of friends of mine that I would do a video. I would post it out there. But if you have any questions regarding this style of trading, please reach out to me. Be more than happy to help anyone. My email is hunterchasetrading@gmail.com. And again, my name is Manny the Magoo. That's my nickname from back in a long time ago, which is another story. But anyhow, I wish everyone a lot of luck today, and safe trading to all.